Okay. Good morning. Good morning. Interesting morning. This pre-market prep might be a little bit different today because there were just a couple things that I wanted to talk about, kind of get off my chest and hopefully help some people out there. Sorry, I'm a little nasally. This weather is brutal. It's killing me. But first thing I want to talk about is the topic of the weekend, of the day of Friday. The major headline, this SVB bank crash that I'm sure everybody's aware of, has caused quite a ripple effect and has just blown up all of Twitter, FinTwit, the headlines, everything. So, first thing I wanted to discuss are honestly these four tickers I have pulled up. These are four that I'm sure most people are familiar with. These are all banks. Three of the four regional that have been hit probably the hardest in sympathy with the SIVB SVB bank crash. So, all I'm going to say about these is because this is all you've heard about for the last 48 hours. Obviously, it looks like there's a ton of opportunity. And I'm not saying there's not. I mean, this one over here, FRC, started at pre-market around $80 a share. It's down to 20. Creates a huge, maybe FOMO inside of people where they wish they would have got short. Or now it looks like maybe 20 is the bottom and they're trying to long it. Obviously, there's potentially career making or month making or whatever opportunities here with these stocks. And I'm not going to talk about them in detail. I just want to say there's tons of opportunity to make a ton of money, to have career days, career months, career weeks, years off of these plays. But if you get involved with them, you take the same risk that happened on Friday with SIVB, where it just halted and stopped. And no one really knows what's going to happen with these. They could go to $1. They could go back up where they came. No one knows. There's 100 theories out there on Twitter, FinTwit, headlines, everywhere you look. No one knows. You put a bunch of money into these things, you could lose it all. It could get tied up, whether you're long or short. And if one of these halt the way that SIVB has or SBNY, you're taking a huge risk for an imminent reward. I'm just saying all that to say, if you trade them, I definitely wouldn't trade them in pre-market, because these things, typically these halts, these long halts happen at points of low liquidity, like pre-market or after hours. So if you are looking to get involved, I would wait. I would wait until after pre-market. I would wait until open. But again, huge risk if you're going to trade these things. I mean, I'm going to keep them on my watch, but I'm not going to fool with them on pre-market. If it's going to halt, that's probably when it would happen. However, there's no playbook for this type of shit hits the fan action. So these could also halt during open. And whatever capital you put into it, you're tied up and you have no clue where it's going to reopen. So tons of risk here for probably tons of reward, depending on how you're going to play them. But this is where all the focus is going to be today, for everybody. And all it's going to take is one major headline, either positively or negatively, to move these things. It could be huge, 20, 40, 50-point swings. So anyway, I don't want to spend any more time on these than most people have already probably spent over the weekend. But these four stocks in particular, and there's others. I mean, I got Bank of America up here because it's a national bank, but it has reacted pretty hard to what's happening with these regional banks, because SVB was more regional, SBNY, and then these other three listed. More regional-esque banks. Bank of America, like I said, is a more national bank. But they have kind of reacted a little more than, like, say, if I pull up JP Morgan, like one of the big dogs. They haven't reacted near as much. But again, it's a ton of risk for a potentially ton of reward. I don't know that I want to get involved, especially pre-market. So I'm going to leave that there. We're going to move on to normal pre-market prep. And the first thing I want to say, so this is MTEM. It's not doing nothing now, obviously. But this is a stock that we talked about on Friday. And on Friday, this was one of the few gappers that was kind of running. And obviously in pre-market on Friday, it gapped up pretty hard and it started to kind of crap out. And I had said in pre-market that one of my favorite, biggest risk reward type setups is a gap and crap. And for me, a gap and crap, gaps up huge, craps out before open, and then ideally in the first half hour it pops up to this purple line, which is VWAP, and it just barely touches it. Basically a VWAP kiss of death, touches it and it fades. So we talked about this on Friday in pre-market prep, and I said I was looking for it for a gap and crap, and that is exactly how it played out. Huge gap, distribution here really below VWAP, craps pretty hard, goes into open weak, pops up to that VWAP level, take a short right in there. And if you would have shorted it right in here and covered right into this, minutia where it kind of just chops around, doesn't look like much because it goes from, let's just say 63 to 49-ish. But that's like a 25% move on your money. So people hate on these sub-dollar stocks. Like I said, they're not my favorite. I prefer them to be over $1 myself. But it had a fair amount of range. So I just wanted to point that out. Gap and craps, easy to identify, easy to see the pattern. This is what you look for. This is an ideal gap and crap setup, and this is an ideal play out on a gap and crap. 25% move. You could have risked 10% above VWAP for 25%. That's better than 2-1 risk reward. You could have risked 5% above VWAP. Whatever. Point is, played out really well, really nicely. And this is one we talked about on Friday. So with that, let me get into, like I said, I know you guys can't see my other screen, but one of the biggest gappers today is this one that's over $1. I actually wanted to do one over $1 because I think it's I like them better. But the biggest gapper, I'll show you that too. ARDS. As of now, this is the biggest gapper on the day. Sub-dollar play. Not going to spend a lot of time on it, but so far it's looking like another gap and crap-esque setup. Gapped up nicely. It's failing. If it continues to fail and get weak, I would play this the same way I played MTEM on Friday. Easy to identify, easy to spot. We'll see how it opens. We still got a good hour before open. But let's get into CMND. And also for the record, there is not a lot of great gappers today. Not surprising, just due to all the market uncertainty. This is going to be a major week for the market. We have all the bank ridiculous action that's still, obviously, as we can see on the screen, unfolding. Pretty wild volatility in pre-market. And then if you look at like even the SPY, this chart here, everybody thought the SPY was going to just open and tank as a result of all these banks. And futures last night ended up green. The SPY actually gapped up pretty nicely. Has since kind of fallen back down. But anyway, it has been a bit better on the SPY action than anybody I think would have anticipated given all the action. So this is will be an interesting week for the markets as a whole. Plus we have a lot of Fed events this week. We got CPI data. I think we got PPI data. We got retail sales data. We got jobs report. I mean, there is a ton of stuff coming out this week. This week could set the tone for the next month or more, 2-3 months, in my opinion, for the markets as a whole. This is a big week. Anyway, all right, CMND. Like I said, this screen here is it just shows the same stock on 4 time frames. This is typically where I start my pre-market prep with any given stock that I am going to trade or looking to trade or making a plan for. Sorry, I'm trying to drink my coffee and talk at the same time. So this is the daily, or I'm sorry, today's chart. This is a 5-day. Then we have the hourly. Then we have the daily. This stock already, I could tell you, is not my favorite because this thing just started trading in November. Relatively new and not a lot of gap stats. It's got one gap over 20%. It didn't close below open. It was on this day right here, 12:15. So technically I could go to 12:15 on the hourly and just look at it. Yeah, it's this one right here. Spiked up big, came back down, consolidated, and held its levels. So I already don't like it. I don't really care to trade new IPOs. It's not a brand new IPO, but it doesn't have a lot of history. I like to use a lot of history to help make more recent decisions. So I already don't like this. But if I were to, there's not even a lot of levels I like either. 5 looks decent. So if I put a line here, you can kind of see it's respected 5 to some degree. Still don't love it. And then of course you got the all-time highs where this stock really opened up at just above 6. Yeah, again, don't love these type of plays. Not saying I wouldn't play it. If I did play it, just right off the top without even doing any more searching into it. I don't even know what the news is on this thing yet. I always look at the news and interpret the news. It looks like it's some biotech thing. Let's see. Let's see if we can't get a headline. I don't even see a major headline. Whatever. It doesn't matter. I'm not saying I wouldn't interpret the news or want to know the news, but I don't see any major news. It could just be sometimes these IPOs, they get pumps on air to create some liquidity, honestly, to get people, insiders, out from where they open this thing up at after it's tanked since opening. Anyway, the 2 levels I would play on this, real simple. Looks like it's respected 5. Next one I play would be all-time highs. I think it's somewhat taboo to play off the all-time highs. I don't think a lot of people like that. However, sellers and I have done that on quite a few occasions, and it's worked out. But it's easy to identify risk-reward level. If it breaks all-time highs by 2-3%, I'm done. Would mess with it again. However, I'd give it a shot. But don't love this. This is definitely not an A+ setup for me. I said I'd try it. I'd try it maybe at the 5 level, 5.10, which is right about pre-market high. I'd give it 4 or 5%. If it didn't work out, I'd get out and I'd look to revisit at 6. And I'd treat 6 the same way. Give it 4 or 5%. If it worked out, great. If it didn't, cool. But I wouldn't give this one a lot of time. So that is CMND. Next one I'd look at 10X is another pretty. Well, actually, we could go back and revisit ARDS. This is the biggest gapper of the day. And not much has changed. Kind of chopped around that level. Yeah, I would definitely treat this as a gap and crap so far. Like I said, it's an hour until open. So there's a lot of time and there's a lot of opportunity for this move to go one way or the other. But this thing is still up about 30%. However, if it opened weak, I would definitely treat it as somewhat of a gap and crap. VWAP or even this 70 level looks pretty nice as far as from a distribution standpoint. All those people that bought it right up in there are bagged, as we call it. So they want to get out on any given pop they can. VWAP 70, gap and crap, keep it simple. Same as that METC from Friday. So anyway, let's go back to 10x and 10x. So these ones, we haven't really got to talk about one like this yet. But 10x is one that has popped around numerous times. So like I said, this is today's action, 5-day. Actually just had a decent little run back on Tuesday. Failed. Anyway, and this is the hourly and this is the daily. And on the daily, of course, where I have my gap stats, this thing has had 12 gaps above 20%. The average spike is 21. See, and this is where I think it gets a little tricky. The average spike shows it to be pretty high, 21%. However, and I know it's tough to see on here, but a couple of these spikes and gaps have been humongous, and that skews the data for whatever reason. Anyway, the main thing here is 12 gaps, and it is closed below open 11 out of 12 times. 92% this thing is closed below open. And the average percent fade from open when closed below open is 19%. So amazing gap stats. The average daily spike when closed above open is 10%. The average percent gain from open when closed above open is only 3%. So when I'm looking at gap stats like this, I get pretty excited because historically, this thing sucks. It can't hold a gain, fades nicely. This just history speaking. So who knows what today brings? There's been many stocks that we've traded where the gap stats are this great, or maybe even 100% closed red. And it rips, faces off. So gap stats are a great indicator. They're one of my favorite, but they are not end all be all, obviously. You can have these things absolutely rip your face off. But anyway, I do like the gap stats. I like the fact that it's gapped numerous times quite nicely and failed on all of them. Even more recent gaps. One here, failed, failed, failed. This thing can't hold water. Anyway, so this one obviously, as of now, is not looking like it's going to close weak. It looks like ideally this thing would open and pop to levels, new highs. Let me pull up another thing here that I often use. Good old Cobra. Scratch that. Doesn't matter. We can do it all here. So basically what I'm going to look to do on this is just identify levels that I like. Let's see back out here. And one thing I like to do, I don't keep it up because sometimes it clogs up the chart a little bit. But volume profile, I love volume profile, but on Thinkorswim, without editing it, kind of squishes your chart up, but that's okay. This is just volume by price, is all this is. So basically this is kind of telling me there's a decent amount of bags here around this 80 level, and it's trading just under that now. Just added confluence. Let me take that off. I think it's easier to see the chart with it off. I actually like volume profile and DOS a lot better. That's what I was going to pull up, but we're just going to stick with Thinkorswim. Anyway, 80, solid volume level 2. So for the intraday level, 80 is definitely a level of interest, which is, I like pre-market highs as levels, especially when there's volume there. Some people hate using pre-market highs as levels. Again, to each their own. I like using pre-market highs as levels, especially when there's volume there. So that's just one area of interest right there at 80 to 82. solid level. And I, of course, on this previous run, I would definitely use those levels as well, anywhere from about 87 to 89. So if it broke 80, next area of interest would be this 87, 89. Basically, the next thing I'm doing from that is I'm going to look at, so of course this daily, it's a 5-year thing, or in this case it goes back, 5 years. Anyway, all this stuff up in here, pretty, I don't want to say irrelevant, but it kind of is irrelevant. These days this thing was trading in the 30s, the 40s, the 50s, and higher. It's trading sub $1 now, so I typically just zoom in on more relevant daily data. One thing I don't like about this is how beat down it is, and the fact that it is sub $1. Sometimes when something is so beat down and it is sub $1, it is very easy for it to just kind of run and hold its gains. People get real excited about the opportunity and the potential to catch these low priced runners, and they get caught up on that hype train where they're going to make a bunch of money because it's going to go to $5 and blah, blah, blah. And I'm not saying any of that's true, but what I'm saying is sometimes it has more staying power than we'd like to see when it's so beat down and under $1. So this setup for me, I wouldn't call it like A plus because of the fact it's so beat down in $1. If this thing wasn't so beat down and it was above $1, I'd get really, really excited about this setup and this pattern and these gap stats. Still like it. Probably will still trade it. But for me, it's not A plus. I prefer it to not be so beat down. I prefer it to be above $1, even really $1.50. But again, it is what it is. Not a lot of great gappers out there today. So anyway, let me zoom in more recent stuff here. Yeah, so when your stock is so beat down, it's hard to find good daily levels because there's just not a lot. Like if you look at this little, actually, let me go to a different thing so it's easier to see. Here we go. This is still 10x today's in the daily, just 2, so it's easier for people to see. But on this daily, as you can see, there's just not, because it's trading down in here. And this whole little fade off here in the last few months, it just doesn't create any nice levels with multiple touches. So that makes it tough. So anyway, the first major level with multiple touches, maybe this $1.50-ish level, bounced off it here, kind of touched it here. Aside from that, it just doesn't offer much. You'd have to go up into here where you're getting closer to 2. Even this massive candle here where it gapped down to the bottom of that gap fill, which I like to use old gap fills as solid levels, that's all the way up at 216. Who knows, it could get there. I mean, it's always good to map these things out. So if I were mapping these out, I'd maybe look at that area right there at 2, and then the old gap fill at about 215. So it's always good to have multiple levels. That way, if it gets up to these things, you can play it accordingly, and they're already drawn for you. I don't think it's going to get there. Anything could happen. It's typically, though, when the market is somewhat weaker, as it is right now. I mean, I don't know what's going to happen, but we'll see. But anyway, when you draw these lines on your chart, especially in Thinkorswim, they transfer, if you draw them on your daily, they transfer over to your intraday and vice versa, or even a different screen. So if I go back to my screen here, the levels are still drawn for me. So it just does it across all charts. So it's pretty handy. So it's just good to have them. That way, if it does climb up to those levels, they're there for you. However, like I said, let me go back here. I'm going to look at the SPY again. This is kind of what I use to gauge the overall market. As you can see, the overall markets now, they did gap up, at least into pre-market, but now they've since faded, which is, I don't know, not surprised by it with the bank action. But anyway, my whole point is when the markets are not strong, I think these day one gappers typically don't have as much staying power. Again, nothing is a certainty. It's just all I'm looking for and all I'm doing is playing statistics, playing the odds, just trying to put as many things into my favor as possible. So, drawing out some levels. I don't think it's going to get up into here. If it does, though, I'm prepared. That aside, depending on how it opens, like I said, that 80-82 area, I like that. If it ends up kind of fading and getting weaker and weaker, then it kind of turns into a gap and crap. Much like, no, it wasn't ARDX. I'm really bad at remembering ticker names. ARDS, that's what it was. Like ARDS. So I like to see this too. This is one thing I do like to see. I don't trade much pre-market. Very rare. I don't like to trade pre-market. I don't like to trade after hours. That's just me. I'm also getting kids ready for school. Like my son's getting ready right now to get him on the bus before too long. But anyway, you can't put stops on a pre-market, things of that nature. And I just don't like it. Low liquidity I've taken some big losses in pre-market because of just all the different factors. Low liquidity, things can swipe up and down like crazy, no halts. Pre-market can get really crazy. But anyway, I do like to see, though, on this gap and crap style setup where it did run back up, got the VWAP, and failed. To me, that's just already showing that it's going to probably respect VWAP. Again, there's still about 45 minutes before open, so this thing could still rip, especially in pre-market. I like to see it respect VWAP, obviously more during market actual hours, not pre-market. But this is a good sign for me. So we'll see how it opens. If it breaks above VWAP after open, that's where that line comes into level, or that's where that level comes into play. 70 looks nice. And if I were drawing more levels on this, here's my little line there at 70. Let's change this. 80 looks about 80 looks good, which is also right there at pre-market high. So I like it when you have this. This doesn't happen all the time. It's happened twice this morning, but it doesn't happen often. Or I don't think it happens often, but when you have a nice daily level where it's obviously bounced off it numerous times, it's respected that level, plus you have pre-market high there. Again, confluence, that's what we're all about. So those are two solid levels there. Beyond that, it gets a little tricky. You could always say $1. Dollars are a big psychological level. I don't like to draw lines on whole dollars because, especially when there's no clear, it's not a clear level, but $1 is a big psychological level for both longs and shorts. Something to always keep in mind. But beyond that, yeah, there's not much I like. Right in there, maybe. Yeah, it's had some touches here, bounced off it here. Has some volume, which I like. Levels with volume for me are the most important. If it's a single touch, like right up here, this is all by itself, outlier move, barely any volume. I don't get real excited about that. I'm not saying I wouldn't draw a line there and count that as a level. I would, but that does not carry near as much weight in my mind as like this right here. This is a pretty nice level with volume, which lets me know that all these people that bought it right in here, 20 million volume that day, not huge, but substantial. But those 20 million buyers that bought, not all 20 million are longs, of course, but whoever longed that stock that day, underwater, big time. And they want the hell out of that stock because they've lost positions cut in half. More. I mean, they're down like 75%. So they're looking to get out. Some of them may have already exited on this pre-market move, but most of the trading does not happen until actual market open. So anyway, levels with volume I like much, much better than levels without. Like I said, I'm not saying I wouldn't count this maybe as a significant level, but if there is levels like this without volume, ideally I'd want to see multiple touches. I just don't like single outlier moves with no volume. I don't get as excited about it. Oh, look at Sellers telling me I'm the king. Sellers is the real king. Dude can flip bias on a dime. I'm a cynical short seller to my bones, and I cannot flip bias. Maybe one day he can teach me how he does it. For now, I just look at his charts and get jealous. So anyway, we've done ARDS, we've done 10X, and we did CMND. ARDS, 10X. See, if it continues to crap out like this, if it just continues to get weaker into open, then my bias would kind of flip on it, and I would look at VWAP a little bit more. But like I said, there's still about 45 minutes till open. Ideally for me, this holds up, and these levels right up in here are the ones where I look to play it. I like gapping craps, but I really like when things hold up a little bit too, just because it provides a little bit bigger risk reward type of setup. We'll see what happens. And then what was the other? CMND. See, this one's kind of holding up. But like I said, this one this is out of the three we've done, this is my least favorite. Not a lot of history. More recent IPO. Regardless, levels are drawn 5, 6. I'd play it accordingly, risk a little bit above each level, leave it alone if it didn't work out. Don't love it. Let me go back to 10X. That's 10X, ARDS. ARDS is the one setting up for gap and crap if it fails again before open. We'll see. So we still got 45 minutes. But anyway, those are the levels. That's how I would draw them. The last thing I kind of do as a part of my pre-market prep, because I like to look at everything with the stock, not just the chart. I like to digest news and filings. I like to digest everything. So one thing I always look at, I love flash sec. I'm not gonna say I'd be blind without it. I wouldn't like to trade without it though. So 10X. They did a reverse split back in January of this year. But basically, as a result of, this is the type of stuff I'm looking for. As a result of a recent cash raise, this company now has an estimated 20 million cash with about 15 months of cash remaining. So they don't have a super heavy cash need. But as you can see here through the warrants, they like to, golly. So when you see stuff like this, a bunch of warrants, a bunch of S3s that are either completed or open or whatever, basically they have diluted their shareholders time and time again. This is common for small caps. They do dilution, they do warrants, then they do a reverse split to get their price back up, and then they do it all over again. Small caps 101. So this is just more added confluence to me that typically when this thing runs, it doesn't hold its gains because they do some sort of dilution. Either warrants are hit and that drives the price down, or they just do a straight up offering. Anyway, that's 10X. ARDS was another. They are broke as shit. As a result, 0 months of cash remaining. They broke. They're broke, and they have an open S3 right here with $94 million remaining. So ARDS, at any point in time on this run, they could drop an offering. This thing could tank from, this thing could run back up to pre-market highs. They could hit an offering, could drop all the way to 45 where it started or lower. I said, filings aren't the end all be all. I'm just looking for multiple reasons to be right and to have a better bias than I could to be wrong. CMND probably doesn't have as much because they're newer. Yeah. Let's see. I mean, according to this, they're broke, which isn't surprising for new IPOs. New IPOs don't usually have a lot of money. I see. This is interesting. They have warrants that are active, not a ton, almost 200,000 shares, but at 550. So when I see that, when I see something like this, I automatically will go back to my charts and draw another line. If it's trading within that range or feel like it could get to that level, basically 550. This thing could get up to 550 and those people could start redeeming warrants. So now I have three levels, 5, 550, and 6, which are nothing wrong with that, and they're all whole dollar levels, so I would play that accordingly. So yeah, we've looked at filings, we've looked at levels. It's pretty much another day of prep. Like I said, today is going to be wild because of this page here. This bank is still just fading. FRC looks like maybe it's found a bottom. PAC W's, it's still kind of fading too. It's going to be interesting. Like I said, when the market opens on these bank stocks, they could rip up 10, 20, 30 points because they're so beat down. They could tank. There's no way of knowing. Tons of FOMO is going to be created here. People are going to buy the dip. People are going to look to short the weakness. But like I said, they could halt any moment. There is a ton of reward to be had here, but there is also, you're just putting yourself at a lot of risk. There were guys that I know that are stuck short in that SIVB, either on the long or the short side. In my opinion, it's better to be stuck short in that scenario than it is long. But either way, their capital's tied up. They're paying probably a ton in fees. And they probably ain't sleeping too well because they don't know what's going to happen. The thing could open back up at 50. It could open at 0. No one really knows. But you're putting yourself at a ton of risk. So I'm going to keep these bank things on watch. We'll see what happens. I did trade these on Friday. I had a really nice trade on FRC on Friday. I traded this morning panic. Shorted it right in this area. Covered it actually right in there. And then it had a 100% bounce. Bounce from 45 to 90. If only I could long. I didn't. But I had a nice trade here. I wanted to be done with it because of all the just imminent risk with this. Like I said, these things could have halted, stopped trading at any point in time. They still can. Black Swan event. We haven't seen anything like this in a long time. No one knows what's going to happen, regardless of what you've read or who you've read it from. Not saying it's bad information, but it's just when shit hits the fan, there's not always a playbook. So with that, stay safe. Be careful if you trade these. If I did trade these, I would look to be in and out pretty damn quick. I ain't going to look to swing them, and I'm not going to look to overstay because the longer you stay in these, the higher chance you have of putting yourself at a more imminent risk level where your capital may get tied up. It may halt for days, weeks, no way to know. So if I traded them, it would be probably first thing in the morning, and it would probably be quick. But again, small caps is where I'm more comfortable, more in my wheelhouse. Hopefully some of these levels work out. You draw them, you play them. It's all you can do. And like I said, there's still at this point about 35, 40 minutes for open. And see, like ARDS, I was looking to play it more as a gap and crap. And now it's kind of passing VWAP in this first level. We'll see how it opens. But that's why you draw lines. And if it breaks through the second line here at 83, that's where it gets tricky because the next level that I see that I even kind of like is the 140, maybe 120. Looking at this. Yeah. That's not a bad one. Couple nice touches here. Nice touch here. Respected it all. Yeah, that's not a bad level either. The old look left. That's all you can do. Prepare, draw your levels, See how things react. Like I said, I'm all about confluence. I'll watch level 2 at those levels. And hopefully at some point in the near future, we can do some live trading with more level 2 stuff. I like level 2. I use level 2. But like I've said before in some of our videos, for me, it's more about the color blocks, which maybe at some point in time we can dive into more detail. Anyway, that's it. That's my pre-market prep. Levels drawn, unless something new's popped up. You know, ARDS, CMND, TENX, 3 biggest small cap gappers of the day. I didn't even talk about UNCY. I'm going to pull it up real quick because this thing has stuck around, and I have lost on it, I think, 2, maybe 3 times now. It just keeps going. I mean, this run started at 50 cents and has just kept going. I mean, it's a gap down at this point. It could be in first red day territory. This is something I'd be reactive to. If it does open red, lower high, I'd give it a shot. If it breaks that 289 level, I'd be done. I'd maybe watch it at 3. Anyway, UNCY, it's continued to burn shorts over and over and over. It's just not, this thing hasn't cracked yet. I'm keeping it on watch. This is definitely on watch, but it's more reactive. Looking for the lower high off 289, 3s, somewhere in there. If it fails hard, 250 is a level of interest, then 225. We'll see how it does, but that thing's burned me so many times. Ugh. Anyway, all right. I got shit to do. I got to put kids on buses. Finish my prep. Hopefully this helps some people. Be safe with these bank stocks. I'm telling you, they could halt at any point in time. Anyway, with that, good luck today. Peace.